Welcome back to the channel. Today we're breaking down a topic that affects nearly everyone. Whether you're financing a home, using a credit card, or taking out a personal loan, how does the cost of borrowing money compare between the United States and the United Kingdom? This isn't just about interest rates. We'll explore credit cards, mortgages, personal loans, car loans, payday lending, and more. And stick around because we'll also examine how inflation, central bank policies, and financial culture shape borrowing costs in both countries. Let's start by looking at the big picture, base interest rates. In 2025, both countries are still navigating the aftermath of post-pandemic inflation and monetary tightening. In the United States, the Federal Reserve's benchmark interest rate sits at around 4% to 5%, after holding rates higher for longer to tame inflation. In the United Kingdom, the Bank of England's base rate is slightly higher, around 5%, reflecting stubborn inflation in services and food sectors. So, at the central bank level, the UK has a slightly higher base interest rate right now, but how does that translate to borrowing costs for individuals? Let's break this down category by category. 1. In the US, credit card borrowing remains very expensive. The average interest rate on credit card balances in 2025 is around 20% APR. Some borrowers with poor credit see rates over 25% or even 30%. Credit cards in the US often entice new customers with 0% introductory offers, but revert to high rates afterwards. In the UK, credit card rates are also high but slightly lower than in the US on average, around 19% to 20% APR for standard cards. Similar to the US, many cards offer 0% balance transfer promotions, but promotional periods tend to be shorter, and rates afterwards still hover around 19% or more. So when it comes to revolving credit card debt, borrowing costs are high in both countries but slightly higher on average in the US. 2. In the US, most homeowners use long-term fixed-rate mortgages. In 2025, average mortgage rates are around 6% to 7% for a 30-year fixed mortgage, up from historic lows but easing slightly from the peak rates of 2023. This fixed-rate structure provides predictability. Once you lock in your mortgage, your interest rate doesn't change even if market rates rise later. In the UK, mortgage structures are very different. Most borrowers use shorter-term fixed rates, typically 2 to 5 years, after which they must remortgage at prevailing rates. In 2025, UK mortgage rates for new deals are around 5% to 6%. On paper, this looks cheaper than US rates, but because UK borrowers have to refinance more frequently, they are more exposed to rising interest rates over time. Another key difference: US lenders typically assess affordability based on gross income but allow higher debt-to-income ratios. UK lenders tend to apply stricter affordability tests and stress tests to account for the possibility of future rate increases. So, while headline mortgage rates may look similar, the experience of borrowing for a home feels different in each country. 3. In the US, personal loans from banks, credit unions, and online lenders carry an average interest rate of around 11% to 14% APR for borrowers with good credit, but rates can exceed 20% for those with weaker credit profiles. In the UK, personal loans, often called unsecured loans, are typically a bit cheaper for prime borrowers. In 2025, average rates for a good credit borrower seeking a loan of $10,000 over 3 years are around 8% to 10% APR. Rates rise for smaller loans or weaker credit, but overall personal loans tend to be somewhat cheaper in the UK than in the US. 4. In the US, car loans are a huge part of consumer credit. In 2025, average interest rates for new car loans are around 7% to 8% APR, depending on creditworthiness and loan term. Longer terms, often stretching to 70 or even 80 months, have become more common, but come with higher rates and total interest paid. In the UK, car financing is more commonly done through personal contract purchase (PCP) agreements, which often feature lower monthly payments but larger balloon payments at the end if you want to own the vehicle outright. Typical APRs for car finance in the UK in 2025 are around 8% to 10% APR, broadly similar to US rates. So, both countries have payday loan industries that serve high-risk borrowers, but the cost structures differ dramatically due to regulation. In the US, payday loans can carry annualized interest rates well above 300% APR, depending on the state. Some states have capped rates or banned payday lending altogether, but many still allow lenders to charge extremely high rates. In the UK, payday loan interest rates have been strictly capped since 2015. Lenders cannot charge more than 1% interest per day, and total repayment, including interest and fees, cannot exceed 100% of the amount borrowed. This means that payday borrowing in the UK is much more tightly regulated and often cheaper in relative terms than in many US states. 6. In the US, overdraft fees remain a major source of revenue for banks. Rather than charging interest, most banks charge flat fees of around $30 to $35 per overdraft occurrence, even if the negative balance is small. In the UK, overdrafts are treated more like a line of credit. Banks charge interest on overdrawn balances typically around 35% to 40% APR, but no flat fee per transaction. This structure means that small overdrafts may cost less in the UK, but larger, persistent overdrafts can rack up substantial interest charges. 7. In the US, credit scores play a major role in determining borrowing costs. The FICO score system influences rates on everything from credit cards to car loans, mortgages, and personal loans. A borrower with excellent credit will get significantly lower rates than one with fair or poor credit. In the UK, credit history matters too. Lenders use data from credit reference agencies like Experian, Equifax, and TransUnion. But the system is somewhat less rigid, and scoring thresholds differ across products and lenders. This means that U.S. consumers may face a wider spread in interest rates based on credit scores than UK consumers. So, what can we conclude about the cost of borrowing money in 2025? Credit card borrowing is expensive everywhere but slightly more expensive in the U.S. Mortgage rates are similar on average, but the U.S. favors long-term fixed rate deals, providing more predictability, while UK borrowers face more refinancing risk. Personal loans tend to be slightly cheaper in the UK for prime borrowers. Car loans are broadly similar in cost, though contract structures differ. Payday loans are much more regulated and therefore often cheaper in the UK than in the US. Overdrafts are structured differently. Flat fees in the US, high APRs in the UK. Credit scores influence borrowing costs in both countries, but the spread is wider in the US. Ultimately, while headline rates may look similar at times, the structure of borrowing products, consumer protections, and financial culture lead to very different experiences for borrowers in the US and UK. So if you're thinking of borrowing money, whether for a home, a car, or on a credit card, where you live makes a big difference. That's it for today's deep dive into the cost of borrowing money in the US versus the UK. If you found this video helpful, subscribe and turn on notifications. We're covering more international comparisons soon, from taxes and student loans to inflation, retirement, and healthcare. And I'd love to hear from you. Have you borrowed money recently? What was your experience with rates, fees, or lenders? Do you think borrowing is fairer in the US or UK? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.